It was strong because the end businesses we're in are strong. Ingersoll Rand today is a different company. 75% of our business is climate and refrigeration related. So as the world is becoming warmer and more urbanized, people are concerned about greenhouse gas emissions. And we've got solutions to eliminate 99.5% of those emissions in commercial buildings. That's created great demand for us, and we've leveraged that well. So related to the tariff question, we've been able to manage that because 95% of what we produce in the U.S., we sell in the U.S., we produce in the U.S., and in China, about the same there. We sell 95% of what we produce in China is made in China. So we're limited a bit with that. Of course, we have that residual effect of price increases that come in around that. But we feel like if we sell value in efficiencies and greenhouse gas emissions, we're able to recover that in price, and we've done that.
We keep talking about GDP in the macro sense. We talk about tax reform and what it's done for some companies. Is anything that you, beyond your control, has any of those things helped your business? The overall economy, for example, is it better now than you remember in previous years?
Yeah, I would say our Thermo King business, which moves perishables, food and other perishables globally, would have seen a demand with trucking customers or marine customers that are now able to depreciate fully their equipment. The capacity that they need to open in the market as a result of that, plus electronic logging devices, which has limited the amount of time they can drive, has created quite a bit of demand, for our products. And so we're building a huge backlog going into 2019 around refrigerated units going on Thermo King trailers. We also saw that with large industrial companies initially as they benefited from tax reform, and then it slowed down a little bit as everyone absorbed the impact of tariffs. We hope that that picks back up again once there's more stability and how that fully plays out.
So you're able to find people if you need them, Mike? Do you need to pay more? Is there any wage pressure that you're seeing yet, or are you able to raise wages because of tax reform?
Joe, that's a great question because people talk about logistics and they talk about tariffs, but there's probably 500,000 jobs today, according to the NAM, that are unfilled in manufacturing. We think that grows to about 2 million over the next decade. I think it's real. So companies need to not only retain the people they've got, but find sources of bringing people in through either a vocational or vocational to professional path, or using some automation for the more repetitive tasks that people do to help break that curve. So there's definitely a need to generate productivity to be able to, it's not letting people go, it's actually being able to do the work with fewer people into the future. So we're thinking about that every day and looking at all the possible levers to pull to be able to make sure that we're producing to demand that our customers expect from us.
So Mike, you raised guidance by about 15 cents for the year. Is that covered by how you beat in the third quarter, or the $1.30 for the fourth quarter would put you at $5.57, and you're now quite a bit above that. So are you going to beat $1.30 in the fourth quarter at this point? If you raise guidance for the year, there's only one quarter left. I quickly deduce that could mean the fourth quarter is going to be better than where the street is right now, right?
Joe, you're quick with math.
Pretty quick.
And I will tell I'm pretty quick.
You're an engineer, so I'm trying to compete. Yeah, you're an engineering guy, so.
Yeah, we're thinking that there's still a little bit of noise coming through the back half of the year with some of the tariffs coming through. We've got that handled, we think, through pricing, but we expect to have about 25% leverage on the volume coming through the back half of the year. Tax rate should be a little bit more favorable. All in, it should be a great year for us. Our goal every year is to be a top quartile company in terms of EPS growth. Over the last decade, we've quietly grown 700% in terms of total shareholder return.
Mike, margins are up too, 80 basis points, and you're not seeing the cost pressure yet that some manufacturers are seeing, or you're getting them up in other ways.
We're seeing a lot of cost pressure. We're getting it up through productivity, offsetting inflation, and pricing, offsetting material costs, and then really making sure that the economic value delivered to customers is something that we can continue to innovate and get paid for.